When I first discovered algorithmic trading, I thought I'd struck gold. Imagine it. Building a robot that trades for you, 24/7, while you sleep, travel, or sip coffee. Sounds like the dream, right? Well, that's what I thought too, until reality hit me. In today's video, I'll share the truth no one tells you about algorithmic trading as a full-time job. From hidden costs and constant failures to psychological pressure and fierce competition, I'll walk you through what it really takes to make it in this world, and why most people quietly give up. Let's get into it. To start with, algorithmic trading isn't just about writing a few lines of code and letting the profits roll in. It's about mastering both technology and financial theory. I had to learn how to code, understand market structure, manage data, test strategies, and avoid classic traps like overfitting. For example, I once built a strategy that performed incredibly well in backtests, but the moment I ran it live, it lost money. That's when I learned the hard way about data mining bias and why robust testing is essential. Another thing I quickly discovered was how expensive this endeavor can be. To trade US stocks, I needed to pay for live market data from exchanges like NASDAQ and NYSE, plus monthly fees for brokerage tools. I even had to rent a virtual private server so my strategies could run 24/7. It all added up. If someone starts trading with a small account, say, $5,000, those monthly costs can eat into profits very quickly. It becomes obvious why so few people rely on algo trading as their only income source. And then there's the psychological side. People think algorithms remove emotions from trading, and to some extent, they do. But I was still the one responsible for the results. I remember one night when my breakout strategy triggered trades right before an unexpected announcement from the Federal Reserve. I woke up to a large loss and immediately began second-guessing everything. Even though the strategy worked well over the long run, that one bad night shook my confidence. Being emotionally detached isn't as easy as it sounds when real money is on the line. I also had to think about the regulatory side of things. Once I considered offering my strategy to others as a signal service, I realized I might need to register as an advisor depending on where I live. In the US, for example, if you manage money for others or provide personalized investment advice, you can't just do it casually. It comes with serious legal obligations. That's not something most solo traders are ready to deal with. Another big reason people shy away from doing this full-time is the sheer level of competition. I realized I wasn't just competing against other solo traders like me. I was up against hedge funds, banks, and high-frequency firms with co-located servers and teams of PhDs. How could I expect to outsmart a firm like Renaissance Technologies with their decades of data, proprietary models, and capital? That made me rethink the idea of quitting everything to trade full-time. Then there's the issue of income instability. Even when I had profitable strategies, they wouldn't work forever. Market conditions change. A strategy that thrived during the COVID volatility of 2020 might perform terribly in the calmer months of 2021. I had to constantly monitor, tweak, or even replace strategies to keep them relevant. It didn't feel like passive income, it felt like a never-ending research project. Over time, I saw that most people who succeed in this field don't try to do it entirely alone. Many join prop firms or hedge funds where they can focus on model development without having to worry about execution, infrastructure, or raising capital. Others take a more realistic route and trade part-time while keeping a stable job. Some, like me, test and publish strategies on platforms like QuantConnect or Numerai, where you can compete for funding and rewards without bearing all the risk yourself. So when people ask me why more traders don't treat algorithmic trading as a full-time job, I tell them it's not because it's a bad idea, it's because it's very demanding. It takes technical skill, emotional discipline, financial resources, and a constant willingness to adapt. I still believe it can be a career, but not in the way people imagine when they first hear about it. It's not about setting up a bot and retiring on a beach. It's about constant iteration, learning from failure, and building an edge over time. For me, it's more than a hobby, but it's not my sole income stream. And unless you're prepared to treat it like a startup, with all the risks, uncertainty, and effort that involves, it probably shouldn't be yours either. So now you've seen the full picture. Yes, algorithmic trading is powerful. Yes, it can be profitable. But turning it into a full-time career? That's a different beast entirely. It demands more than clever code. It requires constant learning, mental resilience, and a realistic approach to risk. I'm not saying it's impossible, but it's definitely not easy. If you're still serious about it, keep watching this channel. I'll keep sharing what works, what doesn't, and how to navigate this journey the smart way. Don't forget to like, subscribe, and let me know in the comments. Have you ever thought about trading full-time?